Hi, this is KD Young.
This is Josh Rucker.
This is the Weather Fair. We talk about business, community,
personal development, and financial pathology.
It's on.
It's on.
Today is a day.
Like Donkey Kong.
You got 14 days.
From today.
For minorities, small businesses out there, you have 14 days.
Women-owned businesses. Hispanic-owned businesses.
Felons.
Black-owned businesses. Felons.
Felons.
Like y'all, you need to go apply. You got 14 days.
For March the 9th. So for the next 14 days, what we're talking about is the government has opened the floodgates for those specific businesses to benefit off of the PPP. If you are not applying for the PPP and you're a business, you are losing out on thousands of dollars, probably sometimes, thousands of thousands. And here's the thing. This is a big thing. You would not get this amount of government assistance as a business owner ever again, probably.
Ever again in your life. Would you? I think I can stand on a box and say that. You'll never get this again.
Not this.
Not this. Right?
They give it.
I know how to get them.
How?
Watch this. If you're not applying for the PPP, you're shooting your business in the foot. Why? Because your competitors are.
And this is the one thing that the PPP allows you to have access to, which typically minorities and people of color in the past have not had access to through the government unless you were a person of another race outside of being black.
Right.
So if you were a person for the past 40, 50, 100 years, a minority in this country, it's probably been very hard for you to get loans.
Super difficult.
So you have to get capital. Capital is key in running a successful business.
You got to.
Cash flow, positive cash flow is key.
Positive cash flow.
And so right now you're able to get almost like steroids.
Yeah. I mean, this is nitrous for your business, people. I don't think people understand. Like, we got a client he probably going to get about $40,000-$50,000, right?
Yeah, he get about 50,000 just from this one.
Just from this. Let me ask you this: what would 50,000 do for your business?
What would 10 do?
What would 10
do? 5.
Exactly.
If you want a small bit, like
you might be a micro, right? What would 5,000 do?
So tonight we're going to break down exactly, number one, the businesses or the changes that was made to the PPP.
Yep.
2, we're going to talk about the requirements that you have to have, but if you want to do it yourself. So we're going to give you the keys to do it yourself.
Yep.
Tonight, and I want you to pay close attention to what we're saying. And if you don't,
take notes.
Be on you.
Take notes.
And then lastly, we're going to talk about the EIDL and the new one coming out and some of the guidelines around that. And we're going to give you some tax tips too in the midst of all this. Tonight's episode is going to be heavy. So you want to take notes.
Listen up.
Josh, now let's talk about first the changes that was made based on Biden and Harris.
So really, during Trump's administration, when the first round of PPP came out, I couldn't get it because I don't have any employees. Right? All I have is 1099 contractors.
Yeah.
Self and contractors, right? But now, Biden and Harris said, sole proprietors, contractors, all those self-employed individuals, y'all can get it too.
And they can. And the first time you could have access to it, but it was a whole lot harder.
Lot harder.
Almost impossible for some people.
Yeah.
For some, and that was a big change. And speaking of what Josh was just saying, I want y'all to really hear some of these numbers. Small business with fewer than 10 employees, the application process is up nearly 60%.
Yep.
But most of those the funding for those businesses was denied for one simple reason, because they used the net profit line to determine if you got the PPP or not. Yep. And like Josh was saying, if you're a small business and you're really operating, you don't have net profits.
Right.
You barely getting by.
Right.
So you instantly disadvantaged probably 70% of small businesses by saying, well, we got to have a net profit.
Yep.
Killed it. You almost killed their dreams and hopes. One of the big things now is that you don't have to have a net profit. They're going to use a different calculation.
Yep. They changed up the formula. They implemented some different things to kind of integrate those smaller.
They did.
Fledgling businesses.
So they use gross versus net.
Yep.
They use your gross income versus your net. And those are guidelines that was given to us directly. So that's number one. Number two, if you were a felon.
Yep.
So if you were a felon, A non-fraud is very important because there's a lot of fraud going on right now.
Right.
If you're a non-fraud felon conviction, then now you have enough time to get the PPP. Now, here's the thing. Currently, a business is eligible for the PPP if at least 20% is owned by an individual who has these two criteria. Number one, an arrest or conviction for a felon related to financial assistance fraud within the previous 5 years.
Yep.
So if you out here committing fraud, you're not able to do it.
You're out of there. Clearly, the government not gonna give you money.
Now, here's the second one. Any other felon within the previous year so I want you all to understand. If you're a felon, pretty much based on fraud, you can't get it.
You're out of there.
Now,
because that's not it. If you own more than or equal to or more than 20% of that business.
That's correct. So that change has been made.
Yep.
The next one with Josh, and this is when you talk about.
That's my favorite, man. This third one is my favorite. They remove the restrictions for the small business owners that are delinquent on their student loans, on federal debts, right? Mm-hmm. And so this is a huge impact because the majority of student loan debt rests on the shoulders of the minorities.
And that's a major point. And this is the reason why. If you have a group of people who have been denied access to build wealth,
yep.
and I really want you all to understand this. Let's look at net worth based on race, and you'll see the gap that we're talking about.
Yep.
For the average Caucasian American, your net worth is in almost $100,000 or more. Mm-hmm. Asians, you're doing really good too. I'm just gonna say you're doing really good too. But when you get to Hispanics and Black people, that's when you see the wealth gap is huge. For Black people, I'm doing Hispanics first. Their net worth as a culture or as a race in this country is around $12,000. Mm-hmm. Black people, you're lower than that. I'm gonna leave it at that. You're lower than that. And so if you don't have access to capital when it comes time to get into school,
yep.
or you haven't been building wealth, you typically have to take out student loans.
You got to take out student loans.
And then this is something that happens to a lot of people, if we're being honest, because people don't have the money to pay them back. They go back to school again to get more degrees, which creates more
debt. Or they come out of school with a degree without the job that was promised to them to use that degree, that good paying job. Now they can't afford to pay back the loan at all, period. So now they've defaulted. Because you got those people that don't even go back.
Never go back.
Right.
So with that being said, understand this. Now it's open for you to get whatever you from the PPP. It's open.
Yep.
It's open. So thank you, Chris with a K. I ain't saw you know why, Chris with a K. So if you're not on our Facebook page, real quick to the people that's on our podcast, we are actually posting the links to each one of these topics. So you can go to the Wealth Effects Facebook page. We're posting the links to everything so you can get approved for this PPP. We want you to get the money.
Yep.
Again, we want you to get the money, but you have to do some of the work to get it. All right. So Josh,
yep.
If I am a new business, not new, but if I'm a business,
yep.
How do I what do I need to have to get the PPP?
Well, first off, you got to have revenue, right?
Yep.
Okay. So the business essentially has to be making money. Mm-hmm. Next, you have to be able to prove that revenue. And what I mean by that is you have to have some type of financial documentation to justify that revenue. Okay? So this is in the form of profit and loss statements.
Absolutely.
If you filed your taxes here recently, you can use that documentation.
So with that being said, I'm going to break down each category based on where you fall. So first we're going to talk about independent contractors, self-employed, and sole proprietorships with no employees. What do you have to have? Let me give you what you have to have for that. Number one, you have to have your ID and a voided check. So your driver's license and a voided check. That's number one. They have to make sure that that you live in America.
Right.
And number two, that you have some type of account. Now, it don't have to be a business checking account. It can be a checking account because you're an independent contractor, sole proprietor. So have a voided check. The next thing you have to have is your Schedule C. Now, the biggest change that's going to help you out a lot is, like we talked about in the beginning of this podcast, typically they were using the net profit line. And I want you all to follow me. They were using the net profit line. Now they're going to use the gross amount. Let me tell you the calculations so that you can understand why this is huge. So let's say, for instance, you were a business. You went out and earned $50,000 last year. But of that $50,000, you had $45,000 in losses. So you probably paid some contractors. Yep. You took care of advertising. You paid some rent. Yep. You had some interest. You traveled a little bit. Yep. And at the end of that, you left over with $5,000 in net profit. So what the first calculation was doing, they would take $5,000, divided by 12, yep, and then multiply the number by 2.5. So if you just do basic math on that, you're probably getting around $2,000 or less, or around that amount. Mm-hmm. Now, because they just changed the guidelines, now they're going to use your gross. So they're going to base a calculation on the $50K you made versus the $5K that you show for net profit, which is a huge.
That's a huge difference.
So with that being said, you have to have your Schedule C. Your Schedule C is a profit and loss statement on your personal taxes, because most times, if you're an independent contractor, sole proprietor, or if you have an LLC, you're going to you have a pass-through entity, meaning it's going to pass through your personal taxes so you can file it. Everyone understand? Gotcha. You got it. Josh, you got it? We all on the same page?
Good.
All right. Next thing you have to have, and this is one last document, you have to have your bank statement so they can see that you have a bank account that's been in place since whatever year. Mm-hmm. Not whatever year, but it has to be in place as of 2020. Mm-hmm. So get your most recent bank statement, and those are the documents you have to have together if you're an independent contractor, sole proprietor, or you have you don't have any employees. Now, that's for no employees. Now, let's get into the next part. If you have employees, the only change you have to have everything else I talked about, but the only difference, if you have employees, you have to have a 940 form, which shows your employer's annual federal unemployment tax return, your FUTA. You have to have that if you have employees, because on that document, it lists your EIN number, how much you pay for your employees, payments from the FUTA tax, which is the unemployment tax, and then finally, it can determine your adjustments. So you have to have that if you have employees. Now, this is so important because the PPP can be forgiven if you pay it out and you use 65% of it for payroll. Now, you can use the other percentages for other things like, I think they said like online, not online, but to update like your online processes and systems. Yeah.
Really more so like just to improve like operations. Yeah. Right? Because I don't believe you can use it for like online marketing and stuff like
you
that.
can't. Well, you can, but I wouldn't. Yeah, I wouldn't earmark it for that. I would use it. I would upgrade like things so you can go online a lot easier. You know, I would categorize something. Yeah. But finally, you can also use it for rent, but you have to use 65% of it for payroll. 65% for payroll. All right. So that's the only change if you have employees. Now, let's talk about corporations. Mm-hmm. Corporations have to have the same thing that the other ones had to have. You have to have your bank statements, your voided checks. But this is the biggest difference. And Josh, you can speak to this because you deal with corporations all the time.
Yeah. If you're a corporation, in order to get the PPP, you need those same documents plus your 1120. All right. So your 1120 is the form that you filed when you filed your taxes. All right. It's going to list all of your deductions and all of your expenses, things that you paid, money that you made. All right. Cool.
That's cool. So next, you still have to have a Schedule C. You can have a Schedule C too if you're LLC. That's why they said. That's why I told you LLCs, right. You have a Schedule C. And then finally, you have to have the same 940 form because that's going to show you the employees you do have on record.
Yep.
All right. So I'm going to pause it for a minute because we just gave you a lot.
That's a lot.
So I really want you all to make sure you have those documents because those documents are going to allow for you to get everything you need for your PPP. So while we're waiting on